You migrated from QuickBooks to Xero, deleted the old files, moved on. Then CRA calls asking for records from 2021. Now what? Here are the data retention rules you must know before leaving QuickBooks Desktop. Data retention rules for migration. Before you delete anything. Switching platforms does not reset your retention clock. Records created under specific tax years keep their compliance obligations regardless of which software you're using now. A T2 corporate return filed for year-end 2022 creates documentation requirements extending through 2028, independent of any software changes. Here are the rules every Canadian firm must know. Rule number 1. The Income Tax Act 6-Year Rule. Section 230 requires businesses to retain books, records, and supporting documents for a minimum of 6 years from the tax year's conclusion. For 2026 migrations, that means QuickBooks Desktop files covering 2020 onward must be preserved and accessible. And the key word is accessible. Archived files that can't be opened without legacy software don't satisfy CRA requirements. Rule number 2. GST and HST records. Registrants must retain transaction-level records for 6 years from the reporting period end or document creation date, whichever extends longer. QuickBooks Desktop contains detailed transaction data that CRA auditors may require to verify filings. Summaries aren't enough. They need line item access. Rule number 3. Payroll records, employment insurance, and CPP. Employers must preserve payroll documentation, including remuneration records, source deductions, and T4 information for 6 years following the last applicable return year. This obligation persists regardless of whether you migrate to a dedicated payroll service. Moving to Xero Payroll doesn't erase your QuickBooks Desktop history. Rule number 4. CBCA corporate records, a completely different clock. Corporations incorporated federally must retain accounting records for the organization's entire operational lifespan, plus 2 years post-dissolution. This extends well beyond the standard 6-year window and is a separate requirement from tax-based retention. Rule number 5. Provincial considerations. Quebec's law, 25, British Columbia's PIPA, and Alberta's PIPA impose additional privacy-based retention constraints. These require documented, defensible retention decisions, not indefinite archival. Each province may have specific requirements that affect how long and how you store data. Rule number 6. Your practical retention checklist. This takes about 2 hours per client, and migration is the right time to do it. Back up the QuickBooks Desktop source file to a verified separate location. Export PDF financial statements alongside source files. Document the archive location with calculated retention end dates. Inform your clients that records are archived, not deleted. And activate Xero Backup before your first post-migration transaction. Migration is a door, not a delete button. Your archived QuickBooks Desktop data carries the same legal weight as actively used files. Backup, export, document, communicate. About 2 hours per client eliminates years of compliance exposure. Wow, Rebook Switch. Link in the description. Migrate smart. Stay compliant.